Hi everyone, it's been a long time since I've done this, so I'm trying to get back into regularly showing up. So please bear with me while I work through this. So if you're listening to this on my any of my podcast avenue, I do have a video version of this on YouTube. So just search for me on YouTube under my business name, Tay Financial Coaching. So for today's topics, I'm going to try to post regularly about different topics about finances, about tax, so you'll learn something from it, and then hopefully get something new that you learn that you can actually apply to your finance and your tax situation. So for today's topic, I also wrote a blog about this, so you can go to my website, Tay Financial Coaching, under the blog portion. But I thought I'll also create a podcast version and a YouTube version of this as well, in case you want to watch it or listen to it. So you have all ways of learning from me. So today's topic will be about lessons I've learned, or not me, or my clients learn as well, from this past 2021 tax season, from the returns that I've done, and also from some of the tax returns I've reviewed for my clients. So the first one, so this is a big thing among a lot of my clients, so especially those in working in the Silicon Valley. If you have RSU, restricted stock units, if you get vested anytime during the year, you will almost always owe taxes. Everyone's always so surprised. Oh, why do I owe a 5-digit bill? So RSU is a supplemental income. So think about RSU like it's like a bonus, but it comes in stock shares. Okay. And the normal withholding for supplemental income is only 22%. And we're just talking about federal. We're not talking about California. California, usually they over withhold. So most of the time you won't have to worry about that, because then you'll always get a refund. And then I'm just talking about California, but of course you're going to have many different state tax bracket. But for California, they almost always over withhold. Okay. So we're mainly just going to focus on the federal. So they withhold 22%. So if you most people who receive RSU, that usually push them already into 32%, 35%, or 37% tax bracket, because when they get RSU, it's usually in large chunk. So if you're in the 32, 35, or 37% tax bracket, imagine if it's withholding in 22%. So that's already 22, the difference between 22 and 32%. That's already 10% difference right there, minimum. So if you get 100K of RSU, worth of RSU shares vested, that's already $10,000 of additional tax liability. Okay. So be aware of that. And then I think this is the time when it probably best to hire a tax professional if you don't understand this, but most companies don't offer additional federal withholding. So you will almost always owe taxes when you have RSUs. Okay. So also, for people who have ESPP, I do get a lot of issues on different equity stuff. So you have ESPP. These are discounted stocks that your employer offers you. Usually it's 15%. So when you buy ESPP, there's no taxable consequence there. It's not a taxable event. But when you sell it, the discount usually 15%, whatever that percentage will be, but it's usually 15%. When you sell the ESPP, you have to report that 15% as ordinary income, because nothing is free. If you get any discount, either from stock options or ESPP, you have to pay that as an ordinary income. Okay. So most people fail to report this. Okay. So don't forget that that is a taxable consequence only when you sell it. So if you have stock options, there's two types of stock options. There's the NSO, non-statutory stock options, or ISO, incentive stock options. Those two are taxed differently. So please do not try to be smart and figure this out on your own. This is a time I will actually tell you you need to hire a tax professional, because this can get very complicated. Like what there's with ISO, there's going to be AMT if you exercise, or like if you exercise and sell, there's no AMT, but what's the tax consequence? So I've had a few clients who have ISO who I did their tax return. They end up owing tax liability the size of a mortgage. I'm talking about hundreds of thousands of dollars, okay? Because they're playing around with exercise. They're like, oh, I can afford to owe that. I know I'm gonna owe money, but not that much. But when I did their taxes, they're really surprised about how much they end up owing. So please do not try to do this yourself. Hire a tax professional. it is worth it. Okay, so I do offer tax planning services throughout the entire year as from my financial coaching services. So you can just go to my website and schedule a complimentary call. Okay, so so some of those clients who actually end up owing hundreds of thousands of dollars, so they end up having to sell their investments to be able to pay for that. Because remember, if you don't pay your tax liability by the due date, usually it's April 15th. This year happens to be April 18th. If you just because you file an extension doesn't give you an extension to pay. Your due date is always that due date. Okay. So if you don't pay everything by the due date, the filing deadline, even though you file an extension, you're gonna owe interest, penalty. So what kind of penalty? A failure to pay, an underpayment penalty, plus the interest every single day that accrues. So it is a very, very costly mistake. Okay, so again, invest in tax planning for this. Okay, do not try to be smart. Do not try to self-prepare if you have stock options. Okay, I cannot emphasize that enough. Okay, you can afford to hire a tax professional if you have stock options, by the way. Okay, so sometimes self-preparation is just not worth it. But to the point I just told you about the stock options. So I've had also review a bunch of clients' tax return were in like they fail to especially with RSU, when they get it might sound simple enough, but then when they get vested, so there's the issue of not paying enough. And when they sell the RSU, they forget to report the supplemental. So remember, you already pay the taxes for the RSU when you vest it. So when you sell it, you already paid some money for it. So imagine you got 100K of RSU. You sold it, for 150K. And then the client forgot to report that they repaid 100K. So they're supposed to only pay income on the 50K, but they did not report the supplement of the 100K. So they're paying income tax on 150K. So I've helped amend a few of my clients' returns where they're getting thousands of dollars back. So imagine how much more you would have saved have you just hired a tax professional to do that. Okay. I've had quite a few who think they know how to figure it out, but they didn't. And then they wonder later on, it's like, oh, I don't know, my tax bill was actually high on those years. But when I review their past returns, which is part of my financial coaching services, is that I do review a tax return because then I do educate you on how taxes work, how to do tax planning. That's are all part of my coaching services. So it's almost I've already had a handful of people wherein they just miss out on this. And then there's quite a few mistakes here and there that we do have to amend. But this is one of the more expensive and costly mistakes I've seen. Okay. So another issue too I've seen is that depreciation on a rental is not a free expense. So if you have a rental business, that's gonna go Schedule E. Okay, so then you'll see if you actually pay attention, if you do self preparation or not, if you actually do pay attention to your Schedule E, you will see that there is a depreciation expense. So that is not a free expense. Okay, so usually when you have a rental, you get to depreciate that over the lifetime of the house or whatever property. So that expense, when you sell it, however much depreciation you use up, you're gonna pay that back when you sell it. So if you use a depreciation of like, I don't know, $50,000 over the course of, let's say, 5 years. So when you sell it, that 50K will be added to the income. So then you will actually kind of pay it back somehow. I hope that makes sense. If that doesn't make sense, then I'll be more than happy to explain that to you if you do have a rental in our complimentary. So, and if you do crypto, you need to have a tracking system. And then one of the ones that I recommend is cointracker.io. Okay, cointracker.io. Okay, so I do not prepare my clients' tax return if they do not have their own tracking system. Because first of all, this is unregulated. It doesn't have a tax form. And have you tried looking at the transaction history and tried dissecting it? It's a pain in the butt. Okay. So I will not take the time to do that. If you have a tracking system, then that literally will track like from the time you buy it to the time you sell it, and kind of will already figure out all your long-term gains, short-term gains. This is also good for you because then you can see, are you really making money from crypto? I'm personally not a fan of crypto, so I don't invest in it, but I will do your returns if you are actually responsible for actually, if you actually do, if you're being a responsible person with your crypto, if you actually track it, then I will definitely do your taxes. So the last part is just stay on top of everything that happens throughout a year that will trigger a taxable event. Okay, so I really pretty much listed out to you anything taxable. So taxable event, just think of it this way: anytime you receive any money at all or any income, that is a taxable event. Okay, and then, and for the other side of investments, well, pretty much any income. So when you sell investments, if there's an income, that's a taxable event. So ISO, when you exercise, so think about exercising ISO or NS or any stock options. Like when you exercise, you're pretty much transferring the ownership to you. So you might not see income as cash, as an income in terms of ownership of shares. So that's why that's a taxable event. When RSU being vested to you, that's a transfer of ownership to you. So you got some sort of income, but in the form of stock shares, that is a taxable event. Okay, and there's a bunch more other things that is a taxable event. So, but just the general rule is that anytime some income is generated in whatever form or shape, that is usually a taxable event. Okay, so anyway, I hope this was helpful to you. And then I am working right now on a financial literacy course. So there will be a section there that's gonna be talking all about different taxes. So I'll really deep dive into all this stuff that I talked to you about. So right now it is available for pre-order. I'm gonna sell it for $297 as of today. And then I do offer 15% off till Sunday, the May 15th. The 15% discount is Moms Are Awesome. That's MOMSRARE, awesome, AWSOME. So basically, if you just it's a pre-order discount code. So if you actually buy before Sunday, I will plan to launch it within the next few weeks before the end of May. So but you can actually see the entire course module in my website. So under Tay Financial Coaching online courses, financial literacy course, you can see all the information. So anyway, thank you. I hope this is helpful. Bye bye.